Underground, overground, wombling free. Wombles of Wimbledon, coming are we. Oh, are we wombling today? No, it's coffee with scruff. Well, it's actually beer with scruff because it's late at night. We're going to have a chat about trends.
Matron, take them away.
And a warm welcome to one and all. So we're going to have a chat about Forex trends on Coffee with Scruff. Well, it's not quite Coffee with Scruff as I was saying, because let's be honest, we all know Scruffy likes a coffee, but he likes a beer as well. There you go, Fossil, proper stuff. You know, Fossil's one of the guys I look after in the squad, and he always winds me up about having a Budweiser. But I like a Budweiser, so here's a drink to you, Alpha.
Drink!
I was making certain I had a drink as well. Trends. Okay. What are we doing? Why are we talking about it? And how we're going to do it? Well, on a weekend, after I've kind of gathered my thoughts a little bit, I look through emails and I look through comments. And I kind of address them in my strange way. Sometimes I kick off, because I'm old, like a rant. But a lot of the time I just like to answer and sort of see where it is. And try and give a little bit of value. That's the general gist of it anyway. And a few days ago, last week, I did a video of cable. Now, you often see me trade. Now, when I trade, I always trade live. Always. It's always in the moment. It's never a rollback chart. And it's never hypothetical against something that I've already done. When I go into market, at the end of it, what you see is what I see. It's unfiltered. Can't be any fairer than that. And inside one of these videos, because I do tell you roughly what I'm doing, because it's always the same, and trading is relatively simple. And I think sometimes you overcomplicate things. And this comment might be down them lines. It's not a bad comment. It's a great comment, by the way. But I genuinely think one of the reasons people have trouble with Forex and trading and just looking at charts in general is they overcomplicate the process. Now, if that's the case, it's no wonder why you lose. So let me flick the lights on. Well, there's a bit of flare. Whoa. Might have been better with them off actually, because I've been grafting all day. I've been in doing the bathroom today. So look at the state. I'm bloody knackered here. Got my trader head on, got my builder head on, got my teacher head on. Now I'm going to touch on the teacher part at the end of the video. So if you hang on to it, we'll talk a little bit about the progression of myself. Because it could be a video on its own, but well, just like to ramble on a little bit sometimes. So let's get into trends, see if we can help, and then I'll give you some thoughts and then kind of where it goes to. So first of all, where's the comment? So there's the video. It was done the other day. It was done 3 days ago. And it was a live trade for cable. All right. And inside it, I broke it down, told you exactly what we're doing, how to look for a trade. And then you see the outcome. Okay. Now, if I come down through the comments, we come to this one. So it's Nevkakan. I hope I haven't butchered your name, so we'll just call you Nav. Okay. So Nav, this is for you. A little salute, because it's actually a great question, what you've put here. And the question is very simple. If a trader was trading a Forex pair to hold on average for 3 to 5 days, which time frame should you be looking for trend direction? All right. Now, it then goes on, and there's a bit to unpack here. So he's kind of answered, I'm assuming it's a boy, by the way. All right. So I do apologize. kind of answered the question themselves. Is it the 4-hour chart? Could be. Right? And then it goes on. The trader's biggest enemy is trend flipping. Correct. But that's not the enemy. So we'll unpack that bit as well. Trend on a 4-hour chart may be the best trend guide for majority of Forex traders. Depends on what you're doing. So we'll unpack that bit as well. And by the time a trader confirms the trend on a daily, the chart is up. Market has already gone up about 5-7 days. And if you ask a supercomputer, it would say the odds are negative right from the start. Why? So there's lots of questions inside of this. So it looks like a singular question, but there's actually a lot to unpack. Trend based on the last 10, 15, I'm assuming that means minutes. 4-hour candles has enough of the big players juice to force behind, so not to flip on a dime. Not quite, but you're along the right lines. So trader has a decent chance without buying over us and lose a game. All right. So let's start breaking this down, shall we? You can take a kind of a screenshot so you can follow along with that. Now, let me just flick this back over. Okay, so we'll break it down. If you're going to hold a trade for 3 to 5 days, the chart you want to be looking at is possibly 2. Definitely the daily wants to be involved, because you want to see whether or not it is breaking above the daily candle. In other words, I'm assuming, I'm going to talk as if it's a rising market, by the way, guys. So what you want to see on the daily candle is you want to see if it's breaking above it. And if it isn't breaking above it, it's at least testing to see what's going on. But it's not really receding more than halfway into the daily candle. Now, if you look at daddy levels, a daddy level will tell you exactly what's going on. Now, a daddy level is the open, close, high, low, and the midpoint. Okay, the part that runs through the middle. As long as it stays above, then you've got a good chance that it will continue to rise. Now, there is sort of strategies out there that say if it's under the 50%, you buy it. If it's above the 50%, you sell it. Bit dangerous, really. What a candle should be telling you is the strength, and you need to be looking at the body of the candle rather than whether a price is above or below a center point. Okay. Now, if you've got a long tail to the bottom, so it's big tail at the bottom, and the body is pushed up, and it's holding above that 50%, then it could well still be rising. So you need to keep an eye on the daily, but then you can monitor it on a 4-hour. Now, I use a system called the River, and it's based on daily charts, but it's monitored on a 4-hour chart. Not to do anything, it's just to see what's going on with it. Okay, so in this essence, if I'm looking for a 3 to 5 day move, I will be gauging it from the daily, and I'll watch it on a 4-hour. I wouldn't look at anything else. Okay, that is it. All right, but the trend doesn't come from the daily. I do multiple time frame analysis, and I'll take it from a higher point. So it'll be monthly, weekly, daily to see if there's any kind of confluence. If there is, the daily is the chart that I'm going to look at, and that would be what's called an anchor chart. Now, an anchor chart is where your trade idea comes from. And then you can look one chart down and one chart above as you're going through the trade. It's called +1, -1. So you'd look up a frame to make certain that you're still reasonably okay with what you're doing, because it might have a change of sentiment on the week and you happen to be in a shallow pullback and it's moving down. But if the week is showing that it's up, your daily's showing it's up, and then you're using your 4-hour just to kind of help time the trade, it's fine. So you're pivoting round a single time frame, the daily. So that's what I would do here. Now, it says the trader's biggest enemy is trend flipping on a dime, i.e. looking at a 1-hour chart and lower time frame trends. Well, first of all, whatever trend you're trading, you should never be looking at it from an hour below, because that isn't a trend. That's just a movement inside a trend. A trend comes from your high time frames. So you'll have what's called the deep trend, what the big boys are looking at. You know, you'll get that from your weeklies, your monthlies, your dailies. You'll have what's called a day trend, or what's happening today. Now you will get that running down to an hourly, but it comes from the higher time frame. So you look at a daily, you look at a 4 hour, you look at an hourly, and you look for confluence between them to see what's going on. Then you're looking to see if that day trend is aligning with the big boys. If it is, you've got wind in your sails and have a good target. If it's against it, it can be a pullback. But a pullback on dailies and things like that can be for 3 or 4 days, which means it'd be a shallow pullback against a monthly chart. But there's still a significant amount of pips to be had. But you've got to be a bit careful, because you know the wind can change. And then if you're looking to sort of trend to get into it, sub an hour, all that's for is to fine tune your entry. That's it. And help time going to market. Very, very simple process. If you go through Where the Scruff, there's a big section on trends, how to find them, how to recognize them, and then of course how to trade them. Okay, so let's have a little look. It says trend on a 4 hour chart may be the best trend guide for a majority of traders. Nothing wrong with that, but like I say, do look at +1, -1 and do a multi-time frame analysis. Okay, and then it says by the time a trader confirms trend on the daily chart is up, the market has already gone up in about 7 days. And if you ask supercomputer, say no. I need another drink, boys and girls. I'm having a good time. Drink.
There'll be a little drink in it for you if you do it. Drink.
It's been a long day. Right. The odds are always against you. Whether you like it or not, they're already against you. And in this situation, they're against you for one reason. You're looking at a single chart. You can only get a snapshot from a single chart. Isn't it better to look at the big picture, see what the big world has to say? Then your odds actually start coming right down. In fact, you're more or less odds favorite rather than odds negative. If you do multi-time frame. I do multi-time frame before I go to any chart. I tell the guys in the squad all the time, they'll say, what we trading? What's your analysis? And I'll give an analysis. And sometimes I'm against what the guys are looking at, quite often. But what it does is it gives me focus. Now, this is going to be another video this week, actually, about focus. Or it will be if you're interested. Because a lot of the time you look at too many assets, too many time frames to enter and one thing and another, and you're just flicking and jumping around. So you need focus. Now, I'm actually moving off what I was talking about there, so I'll come back to this. So by the time the trade is confirmed, that's really hesitant, because you're looking at a single time frame, and you're right. By the time every duck's in a row, you might have missed the boat. But if you're looking for a 5-day move, you should be able to recognize it's at the top of its range. So that means it could be having 3 days going the opposite direction. So why aren't you selling it instead of buying it? Again, it's down to analysis. And then it comes to the last part of this. Trend based on the last 10, 15, I'm assuming that's minutes, by the way, 4 hour candles, has enough big plays and juice force behind it that it wouldn't flip on a dime. So a trader has a decent chance to make money without buying an overpriced asset to lose again. Right. No, the big boys are not looking at 15-minute charts. I was taught by a bank manager. Now, there are different ways, and he was old school, because he's old, like me. And in the bank that he worked for, They never went below a daily chart. Not once. But you weren't bothered about it. They didn't look at a chart in the moment of 15 minutes. What they looked at, they were always looking at forecasting over the next month, the next quarter, the next 6 months, the next year. And they looked at it always with a daily chart. It's where moving averages come from. If you look at key moving averages, a 200, 150, 20, even a 5, none of it's based on 15-minute charts or 4-hour charts. Whenever you're watching Bloomberg or whatever like this, and you talk to anybody who does any major assets, when they talk about a 200, they couldn't give a flying toss what a 200 is on an hourly chart. Not a jot. They are referring to daily charts. Why? It's 200 working days roughly in a year when you take out faith holidays, weekends, etc. There's around 200. That gives the 200 moving average daily. It's the rolling year. The 100 is important because obviously it's a 6-month review, half of 200. The 50 is important because there are quarterly reviews in a year. Quarter 200, 50. There's approximately 20 working days in a month, the 20. There are 5 working days in a working week because it's Monday through Friday, the 5, with a wild card, the 8. Because the 8 is where Japanese candlesticks were made, and that comes from roughly 1 working office hours, 9 to 5, 8 hours, or roughly a session, and there are 3 sessions. 8 is 16, and 3 is 24, 24-hour day period, moving average of 8. So when you're looking at the big players and you want to see what they're up to, 4-hour and below won't even be in the equation. They will be looking higher in the chart. So when they look into move a trend, your daily is the one to look at. Now us as day traders, because we deal with smaller figures, we can then look and read a chart, and I stress this, read a chart to see what the fluctuations are. Because when a big player is taking out profits, that'll move the market. When you take a profit out, it doesn't even know you were there. So these fluctuations, these pullbacks, etc., can be capitalized on if you do multi-time frame analysis. And it's not as difficult as you think, guys. It really isn't. And if you come along to this squad, I'll show you exactly how to do it, because it's in there all the time. And it's what I do every single day. I read it. I read the conditions. And you can see it. Because you have a strong directional drive. Yes, there's a lot of volume in it, but that volume can't continue. There has to be pressure release. And why? Because there's going to be profit taken. There's going to be traders caught on the wrong side of the trade. And of course, you've got opposing positions. So as much as that's pushing up, it will stall out and it will recede on itself before it moves up again. And you've got to be able to see this. And there's a perfect tool for it. It's Fibonacci. And the one thing that most people don't look at, this is why I'm going to go on about teaching a little bit, is they don't look at the one indicator that is the best one on a chart. The price. They look for the magical system. The RSI is overbought. Oh, this stochastic is showing strength. Oh, CCI. There's hundreds of them. Money flow index was banded around about 6 months ago. The ADX was banded around. They all do the same thing. Why? Because they come from the same place. They're all derivatives of price. And they're all lagging because the price has to have been formed in the first place. But if you're looking at candlesticks and you can read a candlestick or read a chart, it'll start telling you what's going on. Funny. So I hope that helps you, Nav. I really do. Because trading is a fascinating subject. And we all have different takes on it. Now, many moons ago when I first started this, I had zero intention of becoming a teacher. I still even don't think I'm a teacher. I mean, as much as people say I am, I don't think I am. But what I've come to learn over all of these years, and you've seen me grow, you know, I was doing okay when I first started, but I'm doing significantly better now. Why? Because my accounts have grown. You know, over them years, my accounts has grown, and my size is pretty safe. Because when I first started, I mean, I was still at like 20 odd quid a point because I had a reasonable account. And this was at a time when you had good leverage as well. It was before the ESMA rules. But it sometimes was very stressful. It's not stressful anymore. Because if I'm wrong, so what? My account can take it, you know, because I kept the position size roughly the same. Because I work to a salary. So that's the first thing. So if I'm working to a salary, does that mean this is a job? Well, if it's a job, I needed to be shown how to do it. And I was. I mean, I'm predominantly self-taught, but I got a lot of information from realistic people. Now, I guess this is where the question of, are you a teacher, has come from, because it was raised this week. Are you teaching? And the answer is kind of somewhere in the middle. What I would say to the question is this. I'm just a guy who does the job, but I'm willing to show you how to do it. I think that's the answer. Because I don't want to stop trading. I could easily teach every day. I do one-to-ones. You know, if you go on the website, you'll see. And it's peanuts for what I charge. And if you go on Trustpilot, you'll kind of see guys that have been there and one thing and another. And the only reason I charge is very simple. If I'm talking to somebody and they book a session on a day, I can't trade before the session. And a lot of the time after the session, I still can't trade because it's either the session's finished, it's late in the day, because for all it's meant to be an hour, it's never an hour. I can talk for England, but also there's so much to show and say. It's very difficult to put it into an hour, which is why when I see gurus and one thing and another saying, oh, follow my magic system and you'll be doing 30 grand a month.
How does that gobshite get on the television?
They're a fucking arsehole. I've done this 19 years. There's not a hope in hell you're going to figure out how to trade watching one 15-minute video. And it's certainly not going to be one of these situations where, well, if you do this and you do that, the outcome is this. That doesn't exist either. X does not mark the spot. And as soon as you see somebody that says this system will work, ignore them. They're full of it. Absolutely full of it. Right? But I'll get back to the charging point because it was all raised as what it is. First of all, there is nothing free in this world. Nothing. I still have to pay my bills and I still like to go out and put food on the table. So if I'm doing a one-to-one with somebody, I can't do my job. And that's what the charge comes in. It's a nominal charge. And to be honest, most of it ends up being a Star Wars figure behind there and goes to a good cause because I think that's the right thing to do. Now, inside of that, I'll try and put you on the right path. So I'll say it again. I don't think I'm a teacher. I think I'm just a guy who does the job. But if you're taking my time off me, that, I guess, is where the charge is coming from. Does that make sense, guys? And is that fair? I know straight away people will be going, well, no, you should be doing it free. Okay. Well, you're going to come and fit my kitchen free. You fit my kitchen free, I'll teach you how to trade. But you pay for the goods as well.
If you're good at something, never do it for free.
Don't think many are going to do that. You know? No, not at all. But if I'm giving you 20 grand a year, should I not be getting 20 grand as well? Just a thought. Anyway, I hope that's answered the questions. I will be looking at Focus this week because it was brought up in the Discord and a little salute to Boffin, who kind of put the idea in my head. And I'll tell you what the idea is before we kind of wrap this one up. The guys are well into doing prop and things and other. And this week with Black Friday, the fivers were doing buy one, get one free. And if you want that, there's a link for it in the description below. You might get a little discount off it as well. So not only is buy one, get one free, you might get a little discount if you've never used them before. But the question was raised, if you got multiple, excuse me, because well, I've had a drink today, I'm still having a go. If you got multiple accounts, how do you control them? And that is a question, because I do trade multiple accounts, but I don't trade them all at the same time, you know, because that is dangerous. I focus prop and my wage is day trading. So whatever I do on one, I automatically do on the other. So I'm not focused on two charts. I'm focused on one chart. I just happen to be opening up two tickets. I don't use copy software because I don't trust it and I don't like it. I do everything manual. So again, because it's manual, I only look at two at once. Everything else I do goes back to the beginning of this conversation about daily trends and one thing and another. They are swing trades. So I'll put my house and my pension and my car, and I keep them separate. But I also split the assets that I trade within them. So I'll have a little basket for pot one, a basket for pot two, and a basket for pot three. And they are separate. And what that does is it spreads out any sort of risk, if you want to call it risk. I don't call it risk, I call it investment, because I don't think you should risk anything. It's why I don't believe in risk reward. I never talk about risk reward, because I think it's a fable, and it's sold by pen pushers and the dream peddlers. Because if you say, oh well, if you only need to win 4 times out of 10 on a 1 to 3 or whatever it is, that's fine, but it's a flawed system. You'll force your trade. But not only will you force your trade, you don't understand what the numbers are. The numbers only work if the position size is identical, target's identical, trade is identical. And that includes the conditions. They're not always identical. So if you're winning all the small and losing all the big, you're still just going to spin wheels. Every trade should be individual. And that's why I break everything down and I look at one thing at a time. So I trade one chart, copy it into that one, and it's identical. And then the others, because they're done on daily charts, I can look at this basket, fine, do a decision, look at the next basket. I've got loads of time to do it. But I'm going to do an experiment, and it might actually kick me in the arse this week. And anyway, keep tuned, and we'll see it. But it's all about focus and multiple assets in one thing and another. Just something I'm thinking about. So I'll cultivate something and I'll knock that together for you guys. So if you're stuck, I'm very easy found. Go in the comments. Actually talk about today's video, but you'll find my contact details there. If you want some links to brokers and things that are legit and worth looking at, you'll find them in the description. And as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.